All right. So today's webinar is going to be 5 steps to finance success. My name is Nguyen with the North Texas SBDC. Also go by another name. They also call me the Money Man because I specialize in helping a lot of my clients obtain capital and help them grow the revenues. So they gave me the nickname the Money Man. Also have a very extensive finance background, over 10 years of experience. So I actually been anywhere from a loan officer to a loan underwriter. I used to approve and deny loans to a debt collector. I even knocked on doors and asked for money. But I say most relevant experience is my 8 years with the SBDC. I was able to help hundreds of clients obtain capital for their businesses. So the goal of this webinar is kind of share with you what tips will work for you to get that financing for your business. So before I get into it, I want to start by talking about the state of small business lending. Let you know that things are kind of tightening up right now. So let's go back in time for a little bit. Now let's talk about the pandemic. So at the height of the pandemic right here, things are really bad. So you were 75% more likely to be denied for a loan. No one was getting a loan. As you're aware, things started to loosen up as we progressed. They had a bunch of loans, PPP loans and things like that. So you are 25% more likely to get approved. Everybody's getting approved. All right, let's fast forward to today. So here's where we are. As you're aware, we have wars going on, inflation, on the verge of a recession, all kinds of things going on. So these things scare banks. Therefore, they're tightening things up. And you're 50% more likely to be denied for a loan. But they can't just deny you for any reason. There's specific reasons why they'll deny you. So that's what I'm going to be going over here in today's webinar, what reasons they'll look for in denying you. And you can help mitigate that by taking the proper steps. Here's the agenda for today. I'll help you understand facts about financing. We're going to talk about credit risk assessment. What are the lender requirements? Things such as collateral and capacity. Help you identify your needs to the lender and give you some really good funding resources. Let's start with facts about financing. Very important facts. First most important fact is it's unlikely you get 100% business financing. You got to put 10 to 20% down. For example, if you want to go to a bank, you need $100,000. The bank will tell you, put down 10,000, then we'll give you the 100. So you got to put at least 10% down. The bank will require a personal guarantee, meaning that you got to sign something promising to repay the loan back. To increase your chances, the bank will take multiple guarantees. For example, I have a lot of young entrepreneurs who don't have the credit worthiness. I get them to get their parents to sign on with them. A lot of times to increase the chances of getting a loan. Process is not quick. There's a lot of paperwork. It could take 1 to 6 months. And you also have to have a proven source of income. You have to show that you can repay the loan back and really assess your situation. Someone with decent credit, 680 and above. That's what banks prefer. Also, collateral will be required, meaning you got to put something up as security. So if the loan goes bad, lender can take that item to recoup the losses. So I'll share you experience I had. I never forget, a couple years ago, I had these seminars, live ones. And I had a specific individual that came into one of my classes. Had this great plan, by the way. She had this skating ring entertainment center that she was going to open. Proven concept, everyone in the community wanted it. She spoke to everyone. They supported it. They needed it for the community. County officials were going to support her. She spent a bunch of money. She paid thousands of dollars to an architect to have these phenomenal blueprints, a 100-page business plan. It went to school for a couple of years to learn how to run a business. So once she felt she was ready, she went to the banks and applied, and she needed $4 million. And then what ended up happening is everybody turned her down. She didn't know why. She ended up in one of my seminars, and one of the first questions I asked her is, do you have $400,000 saved up? What is your credit score? Oh, that's not going to work. Collateral? Oh, that's not going to work either. She ended up wasting a lot of money. So what I did to help her is I helped her scale down her project to be more manageable based upon these facts. Therefore, it really increased her chances. So you don't know these facts, you're just going out there and just applying for loans. It's not going to work well for you. Then terms you need to familiarize yourself with. The first one is called a deferment, which is a period where you postpone making payments. You can request 3 to 6 months. A lot of times you're granted this deferment if you're a startup, a seasonal business, or you're constructing something. I tell all my clients all the time, just ask for it. Whenever you're applying for a loan, ask your loan officer, hey, can I get a deferment? A lot of times they'll give it to you. If not, ask for interest-only payments. From my experience, you either get one or the other, and it really helps you. Because you think about it, your first 3 or 6 months, you don't have to make any payments. That'll really help build your cash flow. Next term, very important, is called a balloon payment, which is repayment of outstanding principal sum made at the end of the loan period. You want to set a reminder and budget for it. Here's how it works. Say you go and you borrow $100,000. The bank will give you 5 years to pay back. So say at the end of each year, you're only paying back $10,000. So at the end of your 5-year term, you pay back 50 of the $100,000 that you owe. So that $50,000 remaining balance is the balloon payment. They're going to ask for all of it all at once. And what's going to happen is the bank's going to say, since you can't pay us, we want to help you out. We'll refinance your loan. So they'll lock you into a longer term at higher interest rates. So it's a trap that can trap a lot of people or leave you broke. So whenever you're applying for a loan, see if there's a balloon payment, because these things can get tricky because you're thinking, oh, my payments are low. That works for me. But then there's a trap at the end. There's this big balloon payment, and they'll trap you into a longer term for the loan. So make sure you're aware of that. Our next section is called credit risk assessment. We're going to talk about credit scores. So this is where it all happened. This is Stanford University. Back in the 1950s, a bunch of smart guys got together, came with this project, this credit score system, and we're still using it. First thing you want to do is you want to know what your credit score is, first and foremost. So go to these 2 websites, get your free credit report, either www.annualcreditreport.com or www.freecreditreport.com. They'll pull from the 3 major credit reporting companies, Equifax, Experian, and TransUnion. And here's where you stand. Over 700, you're good. 650 to 699 is fair. 560, 649 is bad. 559 or less is very bad. Be aware, the higher your credit score, the lower interest rates you can get, and vice versa too. So you happen to have a really low credit score and you somehow get approved, they'll tack on additional interest rates because you're more risky. So it's good to work on your credit. And here's where we stand. Average credit score in Texas is around 650. And people up north, for some reason, have really good credit scores. But luckily for you, I have some tips for you to improve your credit score. Easy tips that anyone could do. First one is called utilization. I mean, paying down balances and keep your utilization under 30%, called garnering your score. Easy example is, say you have a credit card. You can spend up to $1,000 on your credit card. 30% of that is $300. So on your $1,000 credit card, don't spend past $300. Every single month, your score is going to go up drastically. You can go up to like 100 points. I've personally done this, taught family members, taught clients, absolutely works. I'm sure a lot of you are saying, who have really, really bad credit scores, like, how do I even get approved for a credit card? Well, here's an option for you. There's something called secure credit cards. How it works is the amount you deposit becomes your credit limit. There's no credit checks. You apply through your bank, or there's a good website called openskycc.com. And they'll transition to unsecured regular credit card in 6 months. So really easy to do. You just got to come up with a couple $100. For example, you could come up with $300. What you do is you pay them this $300, and they'll give you a credit card where you can spend up to $300, kind of using your own money. And like I said, 30%. So your $300 secured credit card, don't spend past $90 every single month. You're doing a utilization thing, your score is going to go up. So for those of you who can't get a credit card, go with the secured credit card. Anyone could get with just a couple $100. There's also something called piggybacking. If you know someone who got good credit, a parent, sibling, or spouse, ask them to add you on as an authorized user. You don't have to get access. Think about it, it's like they're paying their bills, like you're paying your bills too. Just be cautious with this one, where if you sign on with someone that's irresponsible who doesn't pay their bills, it could negatively impact you. And you can also do something called an immediate credit boost. Very easy to do. You can add your cell phone and utility bills to your credit history through Experian's Boost program. So you go to www.experian.com/boost, hit start your boost. It's a very effective program. So the risk predictiveness of scores are maintained. 64% of scores improve. 10% of unscorable consumers become scorable, meaning people who don't have credit all of a sudden have credit. And big thing is 5 to 15% of people who use this program move into a better score category. And you have issues with your credit, you don't have to go and pay an expensive credit repair agency. You can actually do it yourself. Do creditversio.com. They'll repair all 3 credit bureaus, increase your score, and you can do it yourself. So they have the most powerful credit repair software, and you can use it for free. All you got to do is pay for your stamps for your dispute letters. Then there's another program called Kickoff, KIKOFF.com. How this one works is you make payments to Kickoff. For example, you send them $10 a month. So each month when you send them $10, they'll report to the credit agency that you made a $10 payment on your loan. It's the great thing how it works too. Is say you do $10 a month, and at the end of the year you have $120 you sent to them. They'll send it all back to you. So they're trying to help people build their credit. But if you want to do this on a larger scale, there's a program called Lending Circles, lendingcircles.org. This is where family, friends come together and lend money to each other. Each month, a new member of the Lending Circle receives a loan, but everyone gets a chance. Here's how it works. Say these 4 individuals, John, Carl, Robert, Alex, each have $10. They put into this pot. Now they got a $40 pot. Now they take turns. John borrows the $40, pays it right back. His credit score goes up. The pot is replenished. Carl borrows it, pays it right back. His score goes up. Until everybody gets a turn, everybody's scores will increase with this method. Now we transition to the next section is lender requirements. So we're going to start with collateral. It is the assets that are pledged as security for a loan. So what can you use as collateral? You can use personal assets and business assets. And these are normally things that banks would accept. So assets, you can use things such as your home, land and building, equipment, furniture, and you could even use cash, which I don't recommend. So you want to use cash as collateral. You're pretty much just locking up your money. So you're giving the bank your cash, and they put it in what's called an escrow account. So it gets locked up until you repay your loan. Then they'll give you the cash back. In the event that you default, they can take your cash. So I wouldn't recommend locking up your cash because you can use money to make money. Then there's acceptable assets, things that the bank may or may not take. So for example, like vehicles depreciate like crazy. So a lot of times they don't like taking vehicles. Inventories are meant to be sold. So you could pledge your inventory next week, it could be sold. So they don't like taking inventory either. You can also pledge your receivables, meaning outstanding invoices you have out there. And most of the time this is bad debt. So the bank doesn't like that either. Now I'll give you an example of how collateral works. Say you need $200,000 to start your business. You want to buy a building for $100,000. You want to buy some inventory for $50,000, some things to sell. And you're trying to get $50,000 worth of working capital, money set aside to pay bills. So overall, you need $200,000. Approach the bank, and they say, put down $20,000, 20%, and we'll give you the $200,000. And the great thing here is you're building collateral into your loan. So that $100,000 that you're buying that building for, that $100,000 is built-in collateral. So you have $100,000 of collateral already. So $200,000 loan, you have $100,000 already. There's a $100,000 gap that you need to fill the collateral standards. What most people do is use equity in their homes. But they're good. So this example, like I mentioned before, things are kind of tightening up. So a lot of times now banks want 100% collateral. But when things are loosening up, things are better. They'll be a little more lenient. They'll take like 70% collateral, which I've seen before. And I'll show you this nice chart I found of how they see your home. So how you see your home, how the buyer sees it, how the bank sees it, how the insurance evaluator see it, and how tax people see your home. All right, next requirement is capacity. The bank wants to know, can you repay the loan back? So you really got to assess your situation. Do you have the ability to repay this loan? For example, I use a startup, brand new business, or if you've been in business for less than 2 years, you're considered a startup to them. So what happens is the bank will actually hang on to your day job because you don't have guaranteed money coming in. So say, for example, you're called a secondary source of income. You hold on to your day job, you make $4,000 a month. The great thing is you can factor in your spouse's income too. So your spouse makes $2,000, you have $6,000 worth of personal income. Then now you got to assess your situation. All of your bills. So say your bills, car note $400, student loans $150, credit card payment $150, house note $1,300. So you have $2,000 worth of personal bills. So far you're looking good. You got $6,000 worth of income, $2,000 worth of bills. Now you got to factor in the business loan. Say a business loan is $3,000 a month. So now you got $6,000 worth of income, $5,000 worth of debt, and you have $1,000 cushion, which is good. So you have a cushion here, you're more likely to get approved for the loan. And now let's run through a second scenario where say you have an established business. Over 2 years, you have consistent money coming in. A lot of times with this, you don't have to get a day job. You can focus 100% on the business. So you can use the business income. So your business makes profit of $7,000 a month consistently. So you can use that as the baseline, $7,000 a month of your profits. And then, of course, they'll look at your personal bills too, see if you can personally afford it. So say same situation, you have $2,000 worth of bills. So now you're looking real good. You got $7,000 worth of income, $2,000 worth of personal bills. Factor in your business debt of $3,000, and you have a $2,000 cushion, which is really good. And be aware too, if you have a business with low or no profits, you're unlikely to get a loan. So say, for example, instead of $7,000 a month, you only make $3,000 of profit a month, and you have this $5,000 worth of debt, you end up at negative $2,000. So a lot of times in this situation, you will be denied for the loan. It's called a negative debt service. You're unable to service the debt. Therefore, they'll deny your loan. So you really got to assess everything from your personal bills to profitability, so forth. Next, identify your needs. What does your business need to acquire and buy? Be aware of lack of working capital, a major cause of business startup failure. So I want to share you a little story. Like I mentioned before, I used to be a loan underwriter. And I remember the restaurant that I had one time. So this restaurant, great location. So she had this restaurant near a bunch of chemical plants. She knew that she'd start this business. There's no competitors around. They'll come eat lunch at a restaurant. So she didn't want to be in too much debt. So just give me some money for some renovations, some equipment, inventory. I'm good to go. Fortunately, a couple weeks into it, AC broke down. So when you work in a hot chemical plant, you want to sit in a hot restaurant, cause some disruptions. This is where the working capital comes in. You got this money set aside. You can use it to keep yourself afloat by paying bills, or you can use it to repair that AC. So always, when I'm working with clients, I tell them to build in this working capital, at least 3 months, just in case anything happens in this situation. So she ended up coming back. We gave her some working capital, and she was good to go, which she could have had beforehand and not have these disruptions. Then you want to list assets that you would need real prices. So you want to purchase any of these things with a loan, you would need real prices. For example, building a land, you need to get an appraisal to justify the price. Equipment, exactly who you're buying it from. You need a quote from a vendor. Vehicle, what dealership you're buying it from, exactly the price. Furniture, same thing. This can make a difference between you having a happy banker and a mad banker. So you come in there and you know exactly what you want. You have your quotes, you impress the banker. And like I mentioned before, a lot of these banks, they have business that go under. They have to collect this equipment. They have it sitting in storage somewhere. They're trying to get rid of it. If they say that you can use it and they like you, they'll give it to you at a really steep discount. Happens to a lot of my clients. But if you go in there and you just tell them, I just want $1 million, which used to happen to me. What do you want the $1 million for? I just want to have $1 million. You're going to get kicked out of the office, so you don't want that to happen. Then you want to think about commonly missed expenses. Build these things into your loan. Things such as decorating, remodeling, installation of fixtures and equipment, utility deposits, license and permits, legal and accounting expenses, and the big one, grand opening. A lot of people don't think about this to a couple weeks prior to their grand opening, and they fund it out of pocket. It can leave you broke. So here's the overall loan checklist of the typical things you would need to get a loan. These things you would need to gather ahead of time. For example, get a copy of your ID, 3 years of personal and business taxes, a resume on yourself. Like I mentioned before, quotes for everything you want to buy. And one of the key factors is your business plan. So the business plan will be submitted to the lender and they'll read, and this will help to convince them to give you the loan. For example, I work with a lot of trucking business and they don't have a lot of luck with loans because these trucking guys come into the bank without a business plan and they sit down with the loan officer and like, what do you do? Oh, I just drive trucks, because it's kind of normal for them. So no luck. When it come to me, I was like, you need to really articulate what you do, and let's do this through the business plan. So we formulated a business plan. It's not just driving trucks. You're helping with supply chain issues. You're helping to stock these grocery stores. You're important for the economy, so forth. Then we get this great business plan together, bring it to the bank, then they get approved. Same for my beauty and hair salons too. A lot of them normally don't have luck because they come in there, no business plan. What do? I just do hair. So then we got to articulate through the business plan. So when I'm working on the approach for these, I kind of tell them you need a mission statement. So you're not just doing hair, you're making women feel beautiful, women empowerment, all this good stuff. So really articulate and make it look good. And a lot of times they get approved with this solid business plan. And what goes along with the business plan is financial projections as well, meaning how much you could potentially make to repay the loan back and what's the growth potential of the business. And these two things, the business plan and financial projections, it's going to be kind of difficult to do on your own. So I highly recommend going to your nearest SBDC and working with an advisor who can help you put both of these documents together. And then also there's financial statements too. If you've been in business, they'll ask for things like a profit and loss statement, balance sheet, so forth. And there'll be other documentation that's in-house according to the bank. They'll say you get all these things together, which a lot of my clients do. You have this nice little binder, you're organized, know exactly what you want. Lender's just going to be like, here, just take my money. So here's one of the documents that a bank's going to provide to you some form of fashion in-house, something called a personal financial statement. You're going to be seeing this, so I want to show you how to fill one out real quick. So left side, you got something called assets. Assets is everything that you own. People always neglect this bottom portion right here called other assets. So in here, you want to include everything you have that's of value. So it could be things like jewelry, furniture, appliances, electronics, even guns. Everyone in Texas owns a gun. So name of the game is you want to have higher assets and liabilities. So you want to add everything up, have this number as high as possible. Then move on to the right side. It's called liabilities, everything that you owe. Good tip here is be honest. So if you're thinking, I'm just not going to put it down, they're not going to know. They're going to pull a credit report and they'll see everything. So be honest. Then the goal of this is to determine your net worth. So you take your assets, minus your liabilities, and you have your net worth. The higher your net worth, the high success rate you have, because it shows that you're responsible with your money. So I'll show you some real life examples of some net worths. So this is Mark Zuckerberg, Facebook. He has a $100 billion net worth. Jeff Bezos with Amazon, $152 billion after divorce. And of course, Elon Musk, $245 billion net worth. If you haven't heard, a couple months ago, Elon Musk actually challenged Mark Zuckerberg to a cage fight. True story. And it's unlikely to happen. So I'll do a little something that's fun here. So we're going to determine who will win in this cage fight. So in the chat box, I want you to put in who you think going to win. So put in Mark Zuckerberg or put in Elon Musk. So who do you think going to win? We're going to tally it up. And we're going to decide who's going to win this cage fight. So while you're doing that, I'm going to be going over the teletape. So Mark Zuckerberg, 39 years old, 5'7". He's American, has $100 billion net worth, and he trains in Brazilian Jiu-Jitsu, the wrestling stuff. Elon Musk, 51 years old, 6'1", hails from South Africa, $245 billion net worth, and he trains in karate, taekwondo, and judo. And here's exactly what happened. Elon Musk challenged him, and Mark Zuckerberg said, send me location. And we're going to discuss the results at the end, and let's transition to funding options. So I'll start with one of the most popular ones, which is SBA loans. It's clear up a little misconception. Through this program, SBA doesn't lend money directly. It's called an SBA guarantee program. Like I mentioned earlier, when you sign up for a loan, you sign a personal guarantee. So imagine behind that is a SBA guarantee. So what happens is you fail to repay the loan back, SBA has to pay on your behalf. So the bank is guaranteed to get their money back. So that's our bank like SBA loans. But SBA is just not going to guarantee everybody. So you have to be approved by SBA and the bank. That's why it can take months. It's a very long process. But it's safe for the bank because they're getting their money back. So you're able to get the lowest interest rate. And to expedite this process, I highly recommend going to the SBDC and we can assist you because we know exactly what both organizations are looking for. I once completed the process in about 3 weeks, which is a record time. Here's the rates you can look at. So instead of 20%, they'll only ask for 10% down. And they also can give you up to 25 years to pay back your loan too. So you're interested in SBA loan? Definitely go to this website and use the lender match platform, www.sba.gov/funding-programs/loans. Hit find lenders. Here's how it works. First, you got to describe your needs. Answer a couple questions about your business, a little less 5 minutes. Then you get matched in 2 days. You receive an email and contact information of lenders who express interest on your loan. Here's the thing you may not know too. Lenders have preferences for different industries. Because I used to be in banking. So for example, they have a lender who lended a couple restaurants. They did really well. They came back for a second, third loan. They'll prefer restaurants. They'll see a restaurant. They will look to lend that restaurant. And then on the other end, you may have a bank that lend 2 to 3 restaurants and they all went out of business. Now they're scared of restaurants. They're not touching any more restaurants. So those platforms are very important. They can help you with that process. They'll tell you exactly which banks are interested in you. So that kind of goes to the third step. You can talk to these lenders. They'll show interest. Then you can see what are the rates, terms, fees, and more. And then finally, you just apply for the loan. You submit your loan application, paperwork, and you're well on your way to securing your business loan. There is one exception to when SBA does provide loans is during disasters. So you've been impacted by disaster, go to disasterloanassistance.sba.gov. Just hit apply assistance. And here is the best rate you can get possible. About 2.75% interest, 30 years to pay back, and they give you a full year deferment. So the whole first year, you don't have to make any payments. So it'll help you recover. Now we kind of go into traditional funding options, your commercial community banks. Like I mentioned before, you need fair credit. To get the best shot, you need 680 and above. And a very good product that these banks have is something called a line of credit, which is access to money from a bank as you need it up to a certain amount. I highly recommend for service-based business. For example, I work with a lot of trucking and construction companies, and what happens is you do a job for a company, you have to wait 30, 60, even 90 days for them to pay you back. So in this time period, you got another job coming up. You got to pay employees, buy materials, so forth. So this is where the line of credit comes in. So say you have a $100,000 line of credit with the bank. Doesn't mean you owe the bank $100,000. It's just available to you. You estimate that you need $10,000 for your next job. You just draw $10,000, and that's all you owe the bank. As these invoices come in, you repay it back. You're good to go. So it's good to get a line of credit. You won't automatically be in debt. Just draw it as you need it. And when you go to a bank too, you have your 2 options. You can either request an SBA loan or a traditional loan straight through the bank. Here's the differences. You want the best rates possible, but you have patience, then you go through SBA. But if you're in a hurry, which a lot of my clients are, you just have to go with the traditional loan, which they can do everything in-house, and they complete the process really quickly, but it's at a high interest rate. And then there's also personal loans through a bank too. With these personal loans, you can do it unsecured, no money down, but at very high interest rates. So I recommend going business loan, and if kind of desperation, then you kind of go personal loan. Then there's also credit unions, similar products to commercial community lenders. They have a little bit lower threshold because they're looking to help out the community. So they accept 650 and above credit scores. And here's some good ones we work with. There's the Greater Texas Credit Union, www.gtfcu.org. There's Alliance Credit Union, www.alliancecutx.com. There's also the Fort Worth City Credit Union, www.fwccu.org. Then there's some out there called a revolving loan fund, which is administered through economic development organizations. So these are one of the good ones. How it works is funds are provided by EDA, Economic Development Administration, to various organizations. Eligibility, potential borrowers must demonstrate that credit is not otherwise available. So because the interest rates are so low, everyone can just skip the banks. So you got to get a now letter from the bank and turn it in to qualify. Interest rates start at 3%. Loan terms, 5 to 20 years. You have to put anywhere from 10 to 25% down. Loan amounts, $10,000 to $300,000. Here's the resource for that. First one is atcog.org, the Ark Texas Council of Governments. They serve the counties of Bowie, Cass, Delta, Franklin, Hopkins, Lamar, Morris, Red River, Titus, as well as Miller County. Purpose of the loan, you can use it for working capital, inventory, equipment, and real estate. Be aware there's a loan to job ratio, meaning for every $35,000 you borrow, you gotta create one job. It's really easy to do. I tell my clients all the time. You count yourself as a job, so that's 35,000. Then you count your spouse as well, so that's 70,000 easily. But what you want to do is you want to call them to see if funds are available. So there's a reason why these things are called revolving loan funds, because there's a pot of money, community pot, they call it. EDA gives different organizations $1 million, $2 million, $4 million, depending on how many counties they serve. So they lend it out. So say there's a lot of activity and people come and borrow the full $4 million and the funds have been depleted. They have to stop funding. But then as people repay back the loan, money goes straight into the pot again and they can re-lend it out. That's why it's called a revolving loan fund. It stays within this pot to help the community and help economic development. Here's another resource as well, TEDC.org. So this is the Tyler Economic Development Council. It is for Smith County, and they pretty much have the same parameters as ATCOG. There's a very unique program that you need to be aware of as well called Kiva Loans. 0 interest, no fees. You're in this one, go to kivaushub.org. So how they able to do this is called a crowdfunding type loan. Show you how it works. So this one was funded by 32 lenders. This is Margarita with a tortilla business. She used the loan for corn, gas, and wood. First step, she goes on to the Kiva platform, applies for a loan. She needs $1,000. Then Kiva checks her out. It's like, you're legit. She's approved. She gets to start her crowdfunding campaign. Then number 3, people can start lending towards her goal. So they can lend from $25 and up until she reaches her $1,000. Step 4, through the 32 lenders, makes up her $1,000 that she needs. Step 5, she receives her funds. Step 6, she uses the funds to buy corn, gas, and firewood. And then she starts making money. And then she finally repays back the loan. And Kiva disperses to all 32 lenders again. And the process repeats itself. So a crowd-funded type loan with no middlemen. And if you need help with debt consolidation, AM1's really good. Go to www.am1.com, hit debt consolidation. Here's the terms. If you pay it back in 2 years, you can do a 8.5% interest. 3 years, 9.5, 4 years, 9.5, and 5 years, 10.5. And you have a bunch of student loans, you want to refinance it for a low interest rate, go to www.credible.com. Great thing about this platform is they can give you up to 10 lenders to compare from. And this cool thing called the Credible Rate Estimator. They can show you what your rates are based on your credit score. Like I said before, the better your credit score, the lower rates you can get. For example, right here, you have a 760 credit score, you get a 4.13 interest rate. And they have Fiona, which is on a large scale. So www.fiona.com. They have over 100 lenders on their platform. So you search, compare, apply, relax. So here's the parameters. You got to have at least a 620 and above credit score. The average interest rate, it starts from 5.99%. And you can borrow up to $250,000 at a 7-year term. Then there's crowdfunding. Everybody loves crowdfunding because you crowdfund, people give you money to start your business. You don't have to pay them back. So 3 major platforms are Kickstarter, Indiegogo, and GoFundMe. Here's the differences. Kickstarter screens. They want the best of the best, so not everyone can make it onto the platform. Indiegogo takes everybody, and GoFundMe is more for like extraordinary event. And to get the best shot at crowdfunding, you either got to support a great cause or have a very unique idea. For example, I used to have a lot of clients want to open beauty salons. Just like any other beauty salon, there's a bunch of them. They figure I'll just crowdfund, people give me money, start it, I should be good. Normally, no luck. They don't get much money. But one of the most successful ones I work with is something called a cat cafe. So this is a very popular concept in Japan where there's a cafe, you sip on coffee, you play with cats. And as you're aware, there's a bunch of cat lovers out there. So this particular client went on Kickstarter, got approved, and raised all the money she needed. Didn't even need a loan because it's a very unique concept. Also, I have some friends of mine out in Atlanta started this water bottle company called Aqua Hero. And their mission is to provide clean water to children of third world countries. They designate a percentage of their revenues towards that. They went on Indiegogo, raised all the funds for this business. Now I'll show you an example of GoFundMe. Here's one of the most successful campaigns. So this happened out in California, UC Berkeley. the story of Nguyen right here, as you can see. Nguyen owns a hot dog stand. So on campus one day, he parked at an illegal spot. See right here, this campus police guy came by, confiscated Juan's funds. Not only that, he took Juan's personal wallet, started taking money out. Luckily, they had this student named Martin Flores who came by and recorded this whole thing. He actually started this GoFundMe campaign to help Juan recoup his funds. Goal was $10,000, as you see right here. Within 2 days, it reached over $60,000. I believe it went over $100,000. Now Juan's a very rich man. Like I said, extraordinary event, injustice. And a couple years ago, I worked with a lot of clients in Louisiana. We had Hurricane Ida. And a lot of my clients, they were unable to get money from the insurance. FEMA barely gave them anything. So we turned to GoFundMe. And the community around them, revolved around them, went and provided funds for him to recoup their losses and restore their business. And it absolutely works. So you have any extraordinary event, injustice, that's where you go to GoFundMe. So the steps if you're interested in doing crowdfunding. Number one step, know your project costs and set goals. Because you're going to raise money for projects that have a definitive goal that result in an end product or service. Second step, very important, plan your campaign. Social media promotions, photos, a professional video if possible. Why this is so important? Because there's been a rise of crowdfunding scams. I've been scammed before because I always do a lot of crowdfunding because there's a lot of cool stuff. So I see this cool invention that I want to have it first. I put money in, ends up being a fake company. I lose my money. So now I have this screening process, which everybody else does because of the rise of fake companies. I look through their campaign. I see the manufacturing process. I look at the videos. And when I determine they're legit, then I put my money towards it. And I haven't been scammed since. So when you're crowdfunding, make sure you legitimize everything and make sure you have professional videos, a good campaign, all that good stuff. Next, you want to set rewards for early adopters or potential customers. Structure rewards, close family, friends can get first dibs, pre-launch phase, quantities. For example, you invented something, your backers will get first dibs at a discount. If you have a service-based business, for example, the Cat Cafe, you donate so much money, you get a Cat Cafe t-shirt. Small amount, you get a Cat Cafe keychain. You want to do something to incentivize people to give you money. Then the big one, you got to go back and look at all your costs, cost analysis. How much is the cost of goods? How much is the video cost? How much is the whole marketing campaign? Because things change. Prices go up suddenly. There could be supply chain issues, delay in manufacturing. So what you need to do is go back and be transparent to your backers. Tell them what's going on. And a lot of times you need a little bit more money because prices have risen. A lot of times they're invested into your project. They'll give you a little bit more money all the time. There's also something called equity crowdfunding through startengine.com. So this is Mr. Wonderful off of Shark Tank. He promotes this. So equity crowdfunding lets startups and private businesses raise capital from the crowd. It allows everyday people to invest as little as $100. Everyone can be an investor, not just VCs and private equity firms. Be aware the acceptance rate is less than 1%. So you can try, but if you make it on here, guaranteed money. Here's two ways you can structure it. You can do it as equity, where you give a percentage of your company, or you can do it as a convertible note, where you just structure it as a loan. Then there's other alternative funding resources. So a traditional way is doing a promissory note. Family members, friends of, wealthy individual. Then there's angel investors and venture capitalists, who most of the time they give you funds and they take a percentage of your company. So for angel investors, you can check out northtexasangels.org. For venture capitalists, you can go to dallasvc.com. Then there's other means to get your funding. There's a neat little trick called the ROBS, Rollovers to Business Startups from Retirement. So you got a 401k plan. You can actually roll that into your business startup without taking the penalties. Another smart way is business credit cards. You need a small amount, like 10, 15,000. You can actually get a credit card with that limit. Two good ones are Chase Inc. and Capital One Spark. If you have good credit, you get a zero interest rate. You think about it, it's like a 0% loan. Also, you can make money off of them through their cashback program too. They can use a loan broker. You can get someone to go out there and search for a loan for you. There's a good platform called Lendio.com. Then there's something called factoring, where you can actually sell your invoices and accounts receivable upfront for cash. Two good resources are factoringclub.com and RivieraFinance.com. Then there's also something called revenue-based financing through txfundingsolutions.com. So this is a special case. So you have a business that makes a bunch of money, but you got a really low credit score, you don't have collateral. You can get a loan based upon your revenues. This is how it works. Here's the benefits of it. You get approved less than 5 days. You can help control your cash flow, flexible payment plans. Get an unsecured loan up to $2 million, meaning you don't have to put collateral towards it. How you pay them back is to take a percentage of your revenue. But here's the great thing about it. It's based on your revenue. So you got a slow month, you're barely making any money, you don't have to pay them back. And it's really flexible too. But you got to be in business for at least 2 years. You got to have a minimum annual revenue of $500,000. It's not based on credit. And the terms are from 2 to 5 years. So if you're in the special case where you got a business making a lot of money, but your credit score is low, you don't have collateral, it'll be a good choice for you. All right, let's say you tried all the methods I just showed you. You were denied for all of them. Telling you, still a chance. All right, let's start with some creative funding solutions and strategies. Share some stories with you. There's an individual named Jason Bachman, started this company called Strange Donuts. He was denied 13 times, went to 13 different banks. They all said no. What he did, he held local events, did a POG tournament, beer tastings, wrestling nights. That's how he raised funds to start his business. You're not sure what POGs are. It's little coin things I grew up with. Really fun game. Then it's Anthony Byron, started his company called Product to Market, marketing company. He was short on startup capital and cash flow. So he bought furniture and equipment from companies going into liquidation. Very smart. He also sourced office supplies. So you go to these events to give out these free pens, things like that. That's what he did. He probably stole some pens here and there. So whatever it takes. Most successful story is Miss Ariane Long with this company called Femly. She sells feminine products. So she was turned down by every single venture capital investor out there. She went to a lot of them. So she went back to drawing board, went to study Steve Jobs and Gary Vee's speeches. And she won 15 out of 30 pitch competitions, earning over $100,000 in cash for her business. So you're not sure what pitch competitions are. It's kind of like the show Shark Tank. You go on stage, you talk about your business for about 5 minutes. There'll be a set of judges that'll ask you questions. You do well, you walk away with cash prizes, grants. And normally a lot of these things happen in the spring and summertime, so a bunch of them just pass. I help a lot of my clients win these pitch competitions. And I notify them of ones coming up as well. So here's a good source, one that just passed. United Way Dallas has pitch competitions. And this is the last winner, $60,000, a company called Empowering the Masses. Also, there's founderslive.com. This is a cool one. They did it back in August, where individuals go on stage and then the crowd picks the winners. And here's actually one coming up that you can sign up for if you're a veteran. So $100,000 veteran pitch competition is going to happen November 15th at 3 o'clock. It's going to be online. So to register, go to www.veteran.fund/pitch. $100,000. So if you win this thing, you get $100,000 cash for your business. But I highly recommend you prepare. You don't just want to go to one of these pitch competitions to increase your chances. Here's a great resource for you to practice. Go to thelionsdendfw.org. Got this thing called the Practice Pitch Events. They do it every single month. September 12th is the next one. Go and sign up for it if you're interested in learning how to pitch. Great thing about this, you go on, you do a practice pitch in front of professionals. They'll give you feedback and help you improve. So go here and practice your pitch before you go and do the real thing. Then there's grants. There's some grants I'm aware of at the moment. USDA gives out grants. Anything from $10,000 to $500,000, but you got to be in a rural area. NASC.org gives out growth grants to their members, $4,000 a piece, but you have to be a member for $120 a year, so it may not be worth it. The Business Owners Idea Cafe.com gives out $1,000 grants. If you have a great business idea, you submit it to them. AwesomeFoundation.org gives out $1,000 grants just because they're awesome. VerizonWireless.com has this thing called the Digital Ready Grant, up to $10,000. A lot of my clients are very successful with this one. What you do is you go on the website and you have to take some digital classes. Then you got to pass the test. If you do, then you earn the grant. That's how it works. They want to get everyone digitally ready. It's real easy stuff too. Then there's LISC.org with this Caramino Fund. $10,000 grants on a rolling basis. I believe the last tranche has been depleted, but this one always comes back up. So the unique thing about this fund, it comes from my favorite comedian, Kevin Hart. So you haven't heard, he has his own tequila brand, the Gran Camino Tequila, his own tequila company. So he started this fund, $10,000 grants to Black and Latino-owned businesses. He'll designate a percentage of his revenues towards this. So as I said before, it's been depleted, but as he makes more money, he puts more money towards this pot, he gives out more money. So he's looking to help out a lot of other individuals. So if you're interested, go to www.lisc.org to kind of check this one out. Then there's helloalice.com, the #1 resource for small business grants. This is a great platform. There's a lot of opportunities. Here's what they got coming up. $25,000 grant. Deadline December 1st, called the Stacy's Rise Project. $25,000 grants to 10 women-owned businesses funded by Stacy's. Then there's a $10,000 grant, deadline December 29th, called the Restaurant Disaster Relief Fund. So this one for restaurants that can demonstrate that you lost at least $3,000, and it's funded by DoorDash. Then there's $1,000 grants. Deadline is way far from now, April 30th, 2024. The American Dream Awards, where if you can demonstrate that you're embodying the American dream, they'll give you $1,000. Great thing about this platform, these are just the featured ones. You can scroll, there's a bunch of opportunities. They always update it too. So the thing I love about this, there's something for everybody, so everyone can get something. All right, to recap, this is my 5-step checklist. Everything you need to know, everything we talked about. First thing is credit. First thing you want to do is know your credit score, know where you're at. For example, you got a really low credit score, you're not going to get any worse. So make sure you kind of get that up to get that to an adequate level. Then after you get your credit score right, contribution. Save up some money. Have some money put towards the loan. Just need at least $1,000. So you can come with $1,000, you can get $10,000, and you should be good. Next step is capacity. You got to really assess your situation. So can you afford to repay this loan back? Add up all your bills, see where you're at. And next, collateral. What do you have to pledge towards the loan? If you're lacking this area, like I said, we can assist you with building collateral into your loan to get it to an adequate level. And once you're at 1 through 4, last step is capital. Got to know exactly how much you need. So go out there, do research. Like I said, you need to get an appraisal for a property. If you need a piece of equipment, who you're buying it from, get exact figures. So by doing all these 5 steps, you got a head start on a lot of people. Like I mentioned, the individual earlier didn't know these steps, and she ended up wasting thousands of dollars and years of her life. So you know this, really expedite the process. You can go straight to and have a lot of good opportunities, increase your chances of definitely getting a loan. So I'll give you the last piece of advice. Don't give up if you're denied. You didn't hear a story about Walt Disney? He was denied 302 times. What got funding for Disneyland. So here's a quote from him that's very true. That kind of applies to a lot of my clients too. All the adversity I had in my life, all the troubles, obstacles have strengthened me. You may not realize it when it happens, but a kick in the teeth be the best thing in the world for you. So how it relates to my clients is whenever you go and you apply for a loan, the bank is required by law to give you a denial letter if you were denied. All you got to do is correct the issue and come right back. They can't deny it for the same reason twice. So a lot of my clients, they don't get their loans on the first try. Sometimes it takes up to 4 tries. But I recommend it, and you won't be denied like 300 times though.